Recognize Ms. Nagy for her opening statement.
Chairman Burleson, Ranking Member Frost, and members of the committee, thank you for the opportunity to present testimony on behalf of Americans for Financial Reform. We are a nonprofit, nonpartisan organization working to transform the financial system so it serves as an equitable and sustainable economy to help all families and communities flourish. Our nation is confronting an unprecedented housing affordability crisis. Nearly half of renters are paying higher rents than they can afford, and homeownership has become out of reach for most people. So let's look at the long-term causes of this crisis. First, we need more housing. The single-family home construction industry never fully recovered from the 2008 foreclosure crisis, and today we are building 20% fewer homes than we did in the 1990s, despite population growth. We also have a severe national shortage of housing that people with the lowest incomes can afford. And we are losing what remains of our affordable housing stock faster than we can replace it due to rising rents and stagnant incomes. Investors are outcompeting home buyers. Corporate investors have been buying up homes, apartment buildings, and manufactured housing communities. This surge of corporate ownership has reduced the availability of homes, increased housing prices and rents, imposed new junk fees, and raised eviction rates. Meanwhile, insurance and utility costs are growing. Homeowners' rates have increased an average of 70% since 2021, while property insurers' underwriting loss ratios remain low and profits are at record highs. High utility costs are another driver of housing unaffordability. And we also have unsustainable land use practices. We need new construction of multifamily and affordable housing, yet it is illegal to build anything other than single-family housing on 75% of residential land in the United States. In addition to these trends, several policy decisions made over the last year have harmed renters and would-be homebuyers. First, tariffs and the immigration crackdown are making home building and home repair more expensive. New permits and building starts are at or near 5-year lows, and workforce shortages became the leading cause of construction delays in 2025. The federal government has also been letting predatory actors like RealPage off the hook. Despite being accused of facilitating price fixing among the country's largest corporate landlords, last year, the Department of Justice proposed a weak settlement without fines or an admission of guilt. The current administration has also stopped homebuyer protections that make mortgage lending fairer and safer, including by trying to shut down the Financial Protection Bureau and undermining fair housing enforcement at HUD. This tells Wall Street and other financial firms that they can violate antitrust, consumer protection, and fair lending laws with impunity, making home buying more risky, less fair, and more expensive. The FHFA dramatically weakened Fannie and Freddie's affordable housing goals. The new, significantly lower goals will likely cut off over 175,000 families from affordable mortgages. In early 2025, the FHFA also ended its support of special purpose credit programs, and the FHA, different agencies, took away the First Look program for most post-foreclosure sales, where previously owner-occupiers, people who are buying the homes to live in, and nonprofits had an exclusive 30-day period to purchase a home before opening the sale to investors. That's mostly no longer the case now. Moving to recommendations. First, the damaging policies described above at FHFA, CFPB, HUD, and other agencies need to be reversed. To crack down on corporate landlords, Congress should pass the Homes Over Private Equity or Hope for Homeownership Act, which would impose tax penalties on large investors who buy single-family homes and require them to sell them off over a 10-year period. Similarly, the End Junk Fees for Renters Act would protect renters by requiring landlords to disclose the total amount due each month before the lease is signed. Preferential treatment for hedge funds and private equity firms in the tax code should also be eliminated by closing the carried interest loophole. Congress should also support first-time home buyers, such as through the Down Payment Towards Equity Act, which would expand down payment assistance for first-time or first-generation home buyers. For rental housing, Congress can and should do more to support struggling tenants, including passing the Ending Homelessness Act of 2025, which would ensure that every household who qualifies for the Housing Choice Voucher program receives it. Finally, regarding home insurance, the federal government should be using all tools available to monitor the deterioration of insurance markets, protect consumers, promote climate resilience, and develop a long-term strategy for ensuring our housing stock in areas where private markets do not seem willing or capable to cover it. Thank you for the opportunity to provide testimony on these urgent issues. I look forward to answering any questions members may have about my testimony today. Thanks again.